So this isn't about tariffs. This is about two competing systems. These are about two men who are trying to outfox each other, see who's going to blink first. The G20, so Friday and Saturday, I think it's going to be the biggest collective challenge for these leaders since they started these meetings in 2008 in the jaws of the financial crisis. And there are three reasons why that's the case. One of them is the U.S.-China relationship. It hasn't been this bad in 30 years. The second is the cohesiveness of the Western leaders isn't that great. And the third is if we hit another shock because of the low interest rates and because of high debt levels, central banks and others just don't have the wherewithal to stimulate, to address it. So I actually think it may be even more perilous in geopolitical terms than was 2008.
Wow. We also, Michelle, Kayla referenced this, but we've heard from Larry Kudlow this morning. And he said no preconditions are set for this meeting. He also said the U.S. may move ahead on additional tariffs. So there seems to be some question about what might be coming next for tariffs, for that additional $300 billion worth of goods. And would it be 25% or 10% or what have you? I mean, should a market be rallying on the idea that those tariffs may not be coming? Because all of a sudden, again, here you have Larry Kudlow, of all people, saying, no, they may still be on the way.
Yeah, I think it's impossible to predict at this point, right? Because this is going to be about the personality of Donald Trump in the room with the personality of Xi Jinping to see what actually comes out and whether or not we get this truce that has been possibly telegraphed, right? If we get that truce, I think the market is happy with that. Yes, they would like something much bigger. But to Fred's point, he's right. This is a generational shift. We want the Chinese to be different than they are.
Right. Which seems unrealistic.
It seems unrealistic, yes.
Right. And Fred, I also wonder if, and this is where the Holman Jenkins did have an interesting point in his column lately. He said maybe our approach to Huawei has not been the right one, that the better way should be to entice them into our markets and then use that as leverage as opposed to banning them. Regardless, that chip is on the table, and the Chinese say they want that situation fixed. Should the U.S. allow for them to be operating like normal here?
You know, Hank Paulson, former Treasury Secretary, wrote about this in the Financial Times, and he says the U.S. has the wherewithal to put Huawei out of business if they're totally cut off, and that may be true. But he adds to it that at the same time, we are risking trying to decouple our worlds, the Chinese and the U.S., and many countries in the world just won't come with us. And we may find ourselves maybe not standing alone, but not standing with a lot of others. So there's a real danger if we go into this in this direction that China would be hurt pretty badly over the short term, but we might be hurt very badly over the long term.